But in case if you have active participation in this, then the rule said if you have active participation, then you can additionally deduct $25,000 of loss from your other kind of income. Like from passive income, you already deduct. But if you have active participation, you can additionally deduct $25,000 of losses from other kind of income. But this dollar amount of losses is starting phase out if your AGI is greater than $100,000. So suppose if your AGI is $100,000, then no problem. You can deduct $25,000 of losses easily. That means you can deduct this whole amount from your other kind of income. But in case if your AGI is above $100,000, means suppose your AGI is $130,000, then it said कि it will starting phase out. Means you can calculate your deductible loss by using this formula: $25,000 minus 50% of your excess AGI. So your excess AGI is $130,000 minus your $100,000. It will give you $30,000. 50% of $30,000 is 15,000. So it will give you $10,000. Means if your AGI is above $100,000, then you have certain phase out from your deduction limit. That means now you can only deduct up to the amount of $10,000 from your other sources of income. That means from this $25,000, you can deduct only $10,000 from your suppose ordinary income. And now this now you can carry forward your excess losses to the future year. Okay, is it clear now? If you have
Yes,
any
ma'am.
doubt in any step, you can ask.
No, ma'am, it's clear.
ओके क्योंकि काम कैलकुलेशन वाला पार्ट है, सो मे बी कहीं पर डाउट हो सकता है आपको, तो प्लीज यू कैन आस्क. It is little confusing, so if you want I can explain you again, otherwise.
No, ma'am, you can continue with the next topic.
Okay, sure. So next, vacations, home and mixed use property. So I already explained, if you have your home which you are using it for personal use as well as the rental purposes. So if you are uh, like giving it for rent less than 15 days, then it will not consider as your rental activity. It will consider like all the income you are getting is your oh sorry, all the income you are getting from your rental purposes, then it will not included in your form 1014. So if you have income from a rental activity which you are giving it for rent less than 15 days, then this kind of income is not included in your form 1014. It will only include if you are giving it for rent for more than 15 days. Then, so if you are giving it for rent for more than 15 days, then it will consider as your rental activity. Okay. And if you are using it for personal purposes and as well as the rental purposes, then you can prorate your income and expenses. You can prorate your expenses related to your personal use and related to your rental use. And according to that, you can deduct your expenses. So if your home, if you are using your home for personal use as well as rental use, देखो, if you are using it for completely rental purposes, then no problem. We already discussed it is a passive activity for you, and you can include your income and expenses in your forms, in your schedule C and form 1040. But if you are using for personal as well as rental purposes, then what you can do, you need to prorate your expenses. Like for personal use expenses, you can't deduct in your form 1040, but for rental purposes, you need to prorate and can deduct in your rental from your rental income. But if you are giving your property for rent less than 15 days, then it will not included in your form 1040. That means it will not be a taxable income for you. Clear? Okay, so for proration of expenses, you need to consider that certain kind of expenses related to your personal use you can deduct in your form 1040, and certain kind of expenses you can't deduct. For example, if you have expenses related to utilities, insurance, you can't deduct in your form 1040 if it is used for personal use. But if you are paying taxes and interest, then these taxes and interest you can also deduct in your form 1040. So you need to consider this also. Okay. For example, if you are giving a property for rent for 3 months and using rest of the property for personal use. So what you can do, if you have taxes and interest expenses, then you can prorate this for personal as well as rental use, and both these expenses you can deduct from your 1040. Taxes and interest you can deduct from your 1040, and related to your rental income you can deduct from schedule E. But if you have insurance, repair and depreciation expenses, so again you can prorate to your personal as well as rental use, but for for the proportion related to your personal use, you can't deduct in form 1040 because it is a rule. You can't deduct your personal expenses in your form 1040, but the proportion related to your rental activity you can deduct it in your schedule E. So, are you getting my point?
Yes, ma'am.
Okay, if you want, I can explain in Hindi also.
No, no, ma'am. No problem.
Okay. Next, sale of rental property. So, if you are selling your property, then how you can calculate your gain by using this formula: selling it price minus adjusted basis. Okay. So record keeping requirements. So maintain lease agreement, rent receipt, mortgage records, property tax and bills, invoices for 3 to 7 years. Okay, here is the example given which I explaining you about the proration of expenses. So Mr. Alex owns a lake house used for both personal and rental purposes during 2024. The property is rented for 180 days. You are renting your property for 180 days and 30 days for personal use, and generating $24,000 of rental income. So rental income, if you are using for personal use, obviously you are not paying something. But if you are giving it for rent, you receive the rental income. So this rental income will be included in your schedule E. Now coming to the expenses part, you have your mortgage interest, your property taxes, utilities, insurance, maintenance, depreciation. So again, you can prorate these expenses related to your personal as well as the rental use. Now, what you can do, expenses related to your rental activity, you can deduct in your form Schedule A. And expenses related to your personal use, you can only deduct property taxes and mortgage interest, not utilities, insurance, depreciation, and maintenance. Okay, so allocation of expenses, how to allocate these expenses? Again, prorate करना है आपको expenses को. So you need to prorate these expenses to your personal and rental part. Now, expenses related to your rental part, you can deduct from your gross income, from rental income. And expenses related to your personal use part, you can only deduct interest and taxes from your form 1040 as an itemized deduction. Okay, other personal expenses are not deductible. For example, depreciation, insurance, utilities. You can't deduct for personal use. Is it clear how to allocate these expenses and how to deduct it from your 1040? Any doubt?
No, ma'am.
Okay. So now if you have certain income or loss from flow through entities, then it is also reported in your form 1040. So what are flow through entities? Basically those entities which do not pay the taxes at entity level. All their income and losses flows through their shareholder return. For example, partnership, S corporation, limited liability companies. So their income and losses is reported in your form 1040 through the schedule given. So partnership and S corporation or LLC, if it is considered a partnership or a S corporation, so you have to report for each shareholder their income and loss percentage in the schedule given. And now this income flows to their individual tax return to form 1040. So if you have income from these kind of entities, then no problem, report in your form 1040 in schedule E and pay the taxes. But if you have the losses, then you have to subject to certain kind of loss limitation. You can't deduct all the losses from your 1040. You can only deduct losses up to the amount of your tax basis, at risk amount, and passive activity rules. Distribution. So if you have certain kind of distribution from these entities, these are generally tax free. Only property distribution may trigger gain under certain condition. These distributions you will study detail in the TCP section. QBID, you can get QBID deduction. So QBID deduction is basically given to the flow through entities or even individual tax return. So it is up to the amount of 20%. Like self-employment tax implications. So if you are getting your income from a partnership where you are a general partner, then you need to pay self-employment taxes on this income. But if you are a limited partner and S corp shareholder, then you do not need to pay any self-employment taxes. Clear? Is it clear?
Yes, ma'am.
Okay. So next is comparison table flow through entities. So I think this will be given in your book, not here. S- So what is the basic difference between partnership as corporation and other kind of entities? I think it will also come when we discussed about this partnership individually, partnership as corp individually. Next, flow through summary is given. So, for example, if you have a LLC and it is earning $80,000 and have three members and their ownership percentage is given, so each will report according to this percentage. So, for $80,000 into 40%, 30,000, $32,000 will be reported in Form 1040 of Member A. Next, $28,000 will be reported in 1040 of Member B and $20,000 for Member C. Sale of ownership interest. So, if the partnership or S corporation interest trigger capital gain and loss, if you are selling your interest to somebody else, partners recognize ordinary income for hot assets such as receivables or inventory. Don't worry, it will become in your TCP section, not in your REG section. Flow chart. So, how does it income flows? So, basically, entity net income you report in your form 1120S if it is for S corporation and 1065 if it is for partnership. Then schedule K, which will report all the entities income or losses, any separately stated items in the schedule K. Then schedule K1 is for each partner. Like if you have 10 partner, then this 10 schedule K1 is filed to report each partner's income and losses percentage. Then this income is flows to the partners or shareholders individual return through the schedule E and then to form 1040. Okay, so next, as I said you that if you have loss from these entities, then these losses are not deductible from your ordinary income to full amount. It is subject to certain kind of limitation. So first of all is, have you studied about tax basis, at risk basis? So have you any idea what are tax basis and at risk basis?
What, ma'am?
Tax basis, at risk basis.
No, ma'am.
Okay. So it will come in your partnership and S corporation section. So what happen? A shareholder and a partner is owning the shares in a company and they have certain kind of their stock basis. This stock basis is subject to certain changes, like we will add the liabilities or we will add the debt related to a shareholder. Then we will get tax basis, at risk basis for a partner or a shareholder. So these calculation will be come in your as corporation taxation and partnership taxation. But here it is given the loss limitation, since their losses from entity are flows to their form 1040, but you can't deduct your all the losses from your other kind of income. It will be subject to certain kind of limitations. This is kind of a filtration unit. Like first of all, tax basis limitation. So if you have tax basis in your S corporation or a partnership, then you can deduct your losses up to the amount of tax basis from your other kind of income, and all the losses excess of this you need to carry forward. Next filtration comes at risk limitation, means it said you can deduct up to the amount of at risk basis and rest of the losses you need to carry forward. And next limitation is comes PAL limitation, that is passive activity loss limitation, which state you can deduct your losses up to the amount of your passive income and rest of the losses you need to carry forward. Okay, if you are not understanding it, here example is given. For example, Mr. Ryan owned 30% in a partnership. His share of loss is $30,000 and he have tax basis of 25,000, at risk amount and passive income are given. So the rule said, first of all, your losses will be deducted up to the extent of tax basis. So according to tax basis, you can deduct your $25,000 of loss and excess of it you need to carry forward. So next filtration is at risk basis. It state you can deduct up to the amount of at risk basis means up to the amount of $20,000 and excess of it can be carry forward. For example, it is like a chutney. It is kind of a filtration for you. Like first of all, from the text basis, it is filtered. Like up to the amount of text basis, you can deduct, and rest can be carry forward. Next, this text basis now subject to at risk basis limitation. So it state you can deduct up to the amount of at risk basis and excess of it you need to carry forward. Next, this comes to third step, that is passive income limitation. You can deduct up to the amount of your passive income. That means you can deduct only $10,000 of losses and excess of loss 20 minus 10, which will give you $10,000. Excess of this amount you need to carry forward. Is it clear?
Yes.
Okay, so now comes your adjustment part. So these all kind of income is your gross income, and now from your gross income you have certain adjustment which are called above the line deductions. So you can deduct your deductions from your gross income to calculate your adjusted gross income. Okay, so what are these adjustments? I already discussed educator expenses, IRA contributions, student loan interest, HSA contribution, self-employed retirement, health insurance, alimony, penalty on early saving withdrawal, and military moving expenses. So this will come in detail here. So first of all is educator expenses. Okay, educator expenses. So if you are a teacher, you are a educator, and you are paying you are like purchasing certain kind of equipment related to your education part, and you are getting no reimbursement for it, then you can deduct these unreimbursed expenses in your form 1040, but it should be up to the amount of $300 for each educator. It is for 2024.
Ma'am, means we are spending our part of money for some expenses and they are not reimbursed. So that part of money
Yes,
up till $300 can be deducted
deducted.
from the adjustment, like as a adjustment.
Yes,
Okay.
but it should be related to your qualified expenses, like if you are purchasing certain books, supplies, computer, any like COVID-19 protective items, athletic supplies for physical education teacher.
Related to your education part.
Yes. For 2025, it is $300, like same for 2025 also.
Okay, ma'am.
Yes. So if you are filing as married filing jointly, then you can deduct $600, like 300 for each spouse.
But ma'am, if the spouse is not an educator, then is it allowed to deduct from the spouse?
No, no. For each for each $300 is the limit.
But if the spouse is not an educator, he like
Then
he
no
is
problem.
totally
You can deduct your part only.
okay. You can deduct it even if he's not a part of like the same
Yeah. Yes,
job.
yes.
Okay, ma'am.
Non-qualifying expenses, like if you're paying certain home, internet, community cost, meals, then it is not qualify for these deductions. Okay.
Okay, ma'am.
So, for example, Mr. John, a high-tech school teacher, spent $200 on supplies, 150 on professional training, 50 is reimbursed by the school, and unreimbursed expenses, which is $300, is the maximum deductible amount. So he has $350 of expenses and 50 is reimbursed by the school. That means $300 is the unreimbursed expenses. Then he can deduct in his form 1040. Clear? Okay, so next
Yes.
is student loan interest expense. So if you have certain kind of expense interest on any student loan, then you can deduct up to the amount of $2,500 of this interest from your form 1040. So interest should be for a qualified education, like for higher education, and borrower must be legally obligated to repay the loan. For example, if you are given the if you are like free from paying the debt obligation, then it will be not eligible. You should be legally obligated to repay the loan. Then you can deduct interest on this loan up to the amount of $2,500. You can get the deduction from your form 1040. Okay, the loan should be exclusively used for the qualified part, like for tuition, books, supplies, sports, room. Loan must be from an eligible lender, not a relative or employer based program. Clear? So if you have certain kind of loan, like student loan, for example, your children's have certain, you have taken certain loan for some children, for your children for studies, and you can deduct the interest on these loan up to the amount of $2,500 in your form 1040. Is it clear?
Yes, ma'am.
But if you have taken the loan from a relative or employer, then it will be not deductible. Next, health saving account. So if you have taken certain kind of health saving account plan, then you can deduct your contribution to this plan in your form 1040. Okay, so health saving accounts are basically accounts related to your health part, means you can contribute something to your health saving account and you can get the distribution, and you can also withdraw it from these account to pay for your qualified medical expenses. So if you are contributing to these kind of plan, you can get the deduction in your form 1040. So health saving plans are basically taken by those individuals which have high deductible health plan. So it will come in detail in your TCP section, and it is also subject to certain kind of limitation. For example, For self, you can deduct only $1,600 of deduction. For family, if you have taken a family plan, then you can deduct up to $3,200. Okay, and contribution limit is also there, that how much amount can individually contribute to this plan. So it is also subject to certain kind of limitations. Yeah.
Okay, ma'am.
Okay, so if you are making the contribution, then you can deduct in from 1040. Since you are getting the uh, deduction for the contribution, then if you are getting the withdrawal and you are using this withdrawal for non-qualified purposes, then it will be subject to the taxes. Otherwise, it is tax-free withdrawal if you are using for qualified medical expenses. But if you are using for non-qualified purposes, then it will subject to the taxes also and penalty also. Qualified expenses means if you are paying doctor visit, prescription, dental and vision care, preventive care, diagnostic test, non-qualified expenses, test and non-qualified expenses, like if you are paying for certain kind of cosmetic surgery just to improve your just to improve your appearance, then it will be not allowed. Okay.
Okay.
Yes. Next is moving expenses. Again, if you can deduct your moving expenses, but if should be qualified moving cost related to a change in work location. For example, if you are moving to other kind of location, then you can deduct your moving expenses. Since 2018, this deduction is only available to armed forces, but earlier everyone can get the deduction for the qualified moving expenses, but now this kind of deduction is eligible for armed forces workers. Clear? So qualified expenses means cost of transporting household goods, packing, storage, insurance, logging while moving. Mileage using a personal vehicle is deductible at 22 uh, dollar per mile for 2024. Okay, so if you are moving to other location, then you can deduct the moving expenses. But this subject to certain eligibility and certain limitations. Okay. Is it clear?
Yes, ma'am.
Okay, so quickly covering this. Next is penalty on early withdrawal of savings. So, for example, if you are withdrawing your savings, so, but you are not qualified for withdrawal, then you need to pay certain penalty on this withdrawing. So, this kind of penalty you can deduct in your form 1040. Is it clear?
Yes, ma'am.
Is it clear?
Oh, yes, ma'am.
Okay. So this penalty you can deduct in your form 1040 if you are paying any penalty on early withdrawal. So nature of deduction, this is a above the line deduction again. It will be reported in your schedule 1, line 18, and can be claimed by the account owner who incurred the penalty. So if you have certain security deposit and you are withdrawing it before time, and you paid certain penalty on this withdrawal, then this penalty you can deduct in your form 1040. For example, I told you if from IRA you can withdraw your amount after the age of 55 and half years. But if you are 59 and half years, so if you are not eligible, then you need to pay penalty on this withdrawal. So if you are paying any penalty on early withdrawal, then you can deduct in your form 1040. Alimony, I think we already discussed it in detail. So currently alimony, if you are paying any alimony or you're receiving, it is not included in your form 1040. So neither you get the deduction if you are paying something, and neither you this income will be taxable if you are receiving something. But if it is before 2019, then only you can get the deduction if you are paying the alimony to your spouse. And if you are receiving as a spouse, you need to pay the taxes on this alimony. But for child support and property settlement, it is neither taxable nor deductible. Okay? Neither taxable nor deductible. Okay, so I think we need to discuss remaining part in the next class. So please
Okay.
revise it, and if you have any doubt, then you can ask in the next class.
Sure, ma'am.
Okay. Okay, then bye.
Bye, ma'am. Thank you.
Welcome.